So we're sitting here at 2.75 for our overnight rate for the Bank of Canada. And what's this bring us back to, Matt? We're now just before 2009, end of
Yeah,
2008.
end of 2008, early 2009.
Yeah.
So we're still sitting, quite high relative to where we were the last 15 years for interest rates. So,
Yeah.
again, this is what's holding some stuff up here because we're not sitting at 2009 prices, mainly
Yep.
because wages are much higher than that. Um, but you know, even when we go back to 2019, the market was quite slow during that period, and that's because they raised interest rates quite aggressively to try and get them up to a more level field, just because the market was needing that. So we're still sitting a little bit above here, and we need to get this down, but with the amount of money that governments are spending into the economy right now with stimulus, um, the bond market is telling us that governments are spending too much money. There's going to be inflation. This is why it's not teetering to the downside right now.
Yeah, and that's a perfect point to pivot over. And you can see this uptick now. We're looking here at the bond market. You can see how it's kind of been coming down, but we're actually trending back upwards at this point, and we see that reflected in our fixed mortgage rates.
Yep. I mean, the U.S., the big beautiful bill is going to add a lot of money. And then on the Canadian side, our government didn't come out with a spring budget, and they said they're going to push it off to the fall now, which tells me that they need time to get some things done because they're going to have to come out and potentially, tell Canada that they're 90 billion or 120 billion dollars in the hole.
Mm.
And ultimately, when you're lending to a government, then they need bonds. They need to sell bonds to fund this. So that just means there's more bonds going out into the market, and you can't get the interest rate down when there's not enough demand to buy your bonds. So you have to give a bigger interest rate, a bigger yield to coax people into to purchasing that debt. So if there was massive demand for a Canadian debt, we would have cheaper interest rates, but we just don't.